Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me as he does each Friday for the weekly markets review is Chris Dearborn. He's Managing Director of Nasdaq's Markets Intelligence Desk, my partner in crime every Friday. Thank you very much, as always, for joining me.
Thanks for having me, Jill.
It's been another interesting week of trade. Tape looks very different today than it did the first 3 days of the week, and it started off this morning with a really good GDP reading.
Really did. You know, we were looking at earnings as being a catalyst this week, and they still are on a one-off basis in each one of them in the sectors across the board. You've seen a lot of alpha capture on individual names, but GDP was pretty good this week. You know, looking inside the numbers a little bit, it came at 2.3%, looking at 2%. The consumer spend number was a little bit light at what people thought, but generally Q1 GDP is a little iffy at best, but more importantly, the spend from the corporations and what they're looking at doing was higher. So that kind of carried that number through. And GDP is really important. It's kind of driven by 2/3 of that numbers really is consumer spend. So we really need to see that tick up a little bit more going into the rest of the year. Again, Q4 number was strong. We expect maybe next quarter and the quarter after to kind of tick up a little bit there.
All right, and how about the tech sector? That was getting beaten up over the past 5-6 sessions until coming into trade on Thursday. That's really what's been leading the way the past couple
earnings have been the name of the game this week, and it's going to be the name of the game next week too. You had over 180 S&P companies, S&P 500 names report this week. You had over 140, almost 150 names reporting next week as well. We're really into the belly of the beast here, and with that, what you're looking at is strong numbers. Amazon really hit it out of the park, was rewarded with an all-time high in the stock today, and you had Microsoft, Intel, all sorts of good numbers coming out, but we've been giving that back a little bit over the course of the day. Even Facebook came out after all the bludgeoning they took up on Capitol Hill, came out with great numbers as well. So what's really driving that? It's reward them for the past quarter. The stocks are popping and they're slowly selling off over the course of the day as investors start taking some of the profits, which as a public company is one of the things that you're supposed to be able to do for your investors.
It's also interesting too, the 10-year ticked down just a tad. But
we still broached that 3% mark on the yield, right? So that was really a number that was psychological. 3.5 is really a number where we want to get to after the next 4 or 5 rate hikes, but 3% is still a decent idea of where we're going to be. That yield is crucial. It means, you remember, the yields and the yield and the bond price work inversely. So really what you're looking at there is, if that yield continues to tick up, will it inversely affect stock prices? And the answer there is probably yes, because historically that has been the case. Granted, we've had a long period of time with free, easy money, and we have to see how the market's going to react to that going forward, because they really haven't had that in a long time.
All right, let's wrap it up with the trading week ahead. We have Apple on Tuesday after the close. That's where everyone's going to be focused. FOMC rate decision, not expecting too much there, and the all-important April employment report on Friday.
Absolutely. You know, you've seen a lot of companies come out with spectacular earnings, and a lot of people are crediting the tax reform to that. We really aren't going to see that fulfill for at least a year, maybe 2. Some of these companies, some of the companies have announced immediately out of the gate that they're going to be using them for either employee bonuses or reinvesting into the business, but we need to see how that works out. Q1 numbers have been fantastic. You've got 266 of the 500 S&P companies report. You're going to have a nice chunk of that next week as well. So by the end of next week, we'll have a really good idea of the upside beat and surprise in the growth numbers, all of which are higher than expected. The only caveat there is really the trading volumes.
Right.
You know, and that's kind of really a mix there. We only had one day this week where we traded over 7 billion shares, and that was on Tuesday. Monday was really anemic at just over 5 billion shares on the consolidated tape. Year to date, especially with the volatility we saw back in February, the volumes were averaging over 7 billion shares a day. So we're just at 6.7, 6.5 last 2 days. Today we're at about 3.7 as we're doing this live. I don't know if we're going to get much over 6 billion, which is kind of the run rate for trading volumes last year. So maybe we're turning back to the norm here.
Well, we shall see. Thank you very much for joining me. As always, we have the week off on May 4th. I will be broadcasting live from the Options Industry Conference Wednesday, May 2nd through Friday, May 4th. Be sure to join me there. Thank you very much. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.